What's going on, guys? Welcome back to my channel. I hope you're all doing good and having a great day. So recently I've been talking to a lot of beginner and aspiring investors, which is really great to see. However, one thing has become a bit evident to me, that a lot of these beginner investors don't necessarily know the difference between investing and trading, and sometimes the lines get blurred between the two with their investing approach. So in today's video, I want to go over exactly what the difference is between investing and trading, and explain to you guys exactly why it's so important to be able to differentiate between the two, and always know exactly which one you are doing before you take any position in the stock market. Now, if this is helpful, I might make a series going over some other investing terms, as it can be quite daunting and unclear for beginners. Now, before we get into it, if you are new around here, welcome to the channel. This really is the place to be for all the most relevant information on UK finance. So whether you're looking for information on credit cards or bank accounts, or other content on investing and making a bit of extra money each month, then this really is the place to be. So if you're not already, make sure you hit that subscribe button down below and click that bell so you never miss a video. Now, I know it's a bit cheeky asking before the video even starts, but I would really appreciate it if you guys could smash that like button, as it does really help me out with the YouTube algorithm and basically allows YouTube to share these videos to more people that might find them useful or interesting. And as always, just as a quick disclaimer, this is in no way financial advice. I'm simply just outlining information and giving my honest opinions and thoughts. Always make sure to do your own research and due diligence before signing up for anything. But with all that out of the way, let's get into the video. Okay, so firstly, let's look at trading. So one way that you can make money in the financial markets and stock market is through trading. Now, there are different types of trading plays, but the general idea is that you're taking advantage of short-term fluctuations and opportunities within the market. And usually this is identified through chart analysis and other information on the market. So a few of the most common trading strategies include day trading, which is where you're taking advantage of intraday opportunities, or in other words, buying and selling all in one day with the intention of trying to earn a profit. So usually this would be in extremely volatile markets, and you'd never hold any position overnight. Then we have swing trading, which is similar, but rather than buying and selling all in the same day, the idea is to identify slightly longer term patterns and opportunities. So a swing trade position might be held for days or possibly even weeks. Then we have position trading, which is even longer term than swing trading. So positions might be held for weeks, months, or possibly even years. Now, with all these types of trading, the important thing to remember is that the majority of the information informing the trade comes through chart analysis and market patterns, as well as other news and information that might affect it. And if you're trading a particular stock, you don't necessarily have to see any long-term value in the asset, as trades are usually precisely planned out as to where you buy and sell with each trade. And generally it's important not to hold a position if it doesn't pan out in the way you expected it to. So as I touched on, with trading, generally traders look for volatile stocks, which means that the price of the stock is fluctuating quite a lot. And this is basically so there's opportunities to make high returns in a short period of time. So a particularly relevant example of what a trade might be is keeping a close eye on pharmaceutical companies that are in the race to find a corona vaccine, as it's likely that the company that is first to market with a successful vaccine will have a significant increase in stock value. So there is opportunity to make money out of this potential spike if you do your research and plan out your strategy, but you don't necessarily need to see long-term value in that company. Another example could just be using chart analysis to identify daily trends on a particular stock, and then use that information to your advantage to then day trade that stock, buying on dips and selling on highs to turn a profit. But the important thing to remember with both of these examples and with trading, traders don't always have to see long-term value in the stocks that they're trading, as they're only taking positions over a short period of time, and the plan is to never have the money tied up after the trade has been carried out. Okay, so we've looked at trading, now on to investing. So when it comes to investing, obviously the intention is to also make money through the stock market. However, rather than having laid out buy and sell points, the idea is to look for more long-term opportunities that you see genuine value in. So this might be for years or even decades to come. So with this, investors may not be too concerned about intraday fluctuations in value, and instead the focus is on long-term growth. So an investor's strategy might consist of buying and holding and keeping that money tied up in the investment, whilst potentially continuing to add to the position size. So with that in mind, it's not to say that it's not still important to look for opportunities to buy and sell, as it's always going to be important to try and buy into an investment at a low price, getting yourself a good deal, as well as selling off some profits if you think maybe the investment has become a bit overvalued. Whereas if you were trading, you'd usually sell out of your entire position. So one example of a stock market investment could be investing in an S&P 500 index tracking fund. So through analysing and doing your research on this index, you might see long-term value in it and feel comfortable putting your money into this over a long period of time to generate yourself some profit. Another example might be a dividend fund, where the actual value of the stock might not be very volatile at all, but through the investment you'll be generating income in the form of dividends each and every year. So hopefully that's clarified what the main differences are between investing and trading. But now I just want to go over exactly why it's so important to understand what your intentions are before taking a position. So I think it's so important to always know in your mind whether or not you're taking a trade or an investment, and exactly what your plan is every time you buy or sell any shares. As on the whole, you don't want to be changing your mind as to what your intention is midway through a play, as usually this is an indication that emotions are actually getting the better of you. So if your initial intention was to buy on a previous dip and sell on a previous high of a particular stock, but you never actually end up selling the position even though it's reached a previous high point that you expected it to reach, and greed is just causing you to hope that it continues to go up. So with this, the initial intention of making a trade has panned out the way you thought it would. However, your mentality has changed and you're now thinking of it as more of an investment, which you may or may not have researched enough before taking the initial position. Or alternatively, you find a company that you see long-term value in and invest your money into it. However, then maybe the stock dips by a few percent and you panic and sell the entire position. Now in reality, if you see long-term value in this investment opportunity, you probably should have never sold, because then you've just guaranteed yourself a loss. And a few percent in the great scheme of things over a long-term investment isn't the end of the world, and it should recover if you've done your research. But the mentality of a trader has influenced your decision to sell. Now the other really key factor between differentiating between investing and trading is the actual time consideration for you as the investor or trader. So what I mean by this is, if we look at trading, the intention is generally to make quicker profits over a short period of time, but the actual time required by you as the trader to analyse all the information to be able to make money out of these situations is much higher than it would be compared to if you were looking at a long-term investment. Whereas with investing, it's more of a passive long-term income, where you do your research to find investments that you see long-term value in, and then from that point forward you simply put your money in, and then there's less need to interfere with it going forward. So with that considered, it's important to understand how that time factor will affect you. Do you have the time to be a trader and look at the markets throughout the day, or do you actually work full-time and therefore investing may be more suited to you? But the important thing is just to understand the implications and consider which is more suited to your lifestyle. So some of you might be interested to know what I personally do. So I'm generally more of an investor and look at long-term opportunities. However, on occasion I do take advantage of opportunities if they present themselves to me, in the form of a swing trade or a position trade. But personally, I just don't have the time within my schedule to be day trading, as I do work full-time during the hours that the markets are open. But I don't really feel like I'm missing out on anything, as I've hopefully explained that there are opportunities in all areas within the stock market, as you're never going to be able to take advantage of every opportunity out there. And I'm not going to get into which is better between trading or investing in this video, as I think it just comes down to personal preference and what suits your lifestyle. But especially for beginner investors, I just think it's important to understand what your intentions are every time you take a position. But there we have it, that basically covers everything for today, guys. If you did make it this far, thank you so much for watching. And if you did enjoy it or feel like you learned something new, I'd really appreciate it if you could smash that like button down below, as it does really help me out with the YouTube algorithm and enables YouTube to share these videos to more people that might find them useful or interesting. And as always, if you are new around here, this really is the place to be for all the most relevant information on UK finance. So whether you're interested in knowing what are the best bank accounts and credit cards out there at the moment, as well as content on investing, making and saving a bit of extra money each month, then this really is the place to be. So if you're not already, make sure you hit that subscribe button down below and click that bell so you never miss a video. And I'm actually really interested to know what you guys think about trading and investing in this whole topic. Did you already understand the differences, and which do you personally do? And also, where do you guys see the most value? So do make sure to drop your thoughts in the comments down below. And as always, if you do have any questions or feedback for me, just drop them in the comments down below as well, and I'll make sure to respond to all of you. But with all that being said, take it easy guys and keep saving.